Welcome, dear traders. You are watching a recap of the Asian session. The default deadline is looming on the horizon. Janet Yellen keeps on making warnings that the government could run out of money to pay its bills on the week. Asian stock markets are likely to close the week with mixed results. Australian, New Zealand and Chinese equities declined while Japanese ones added gains. Let's discuss what sentiment prevailed on forex. A recent rally of the US dollar looks quite odd given mounting concerns over the debt ceiling. The standoff in the talks is not beneficial for the greenback as the pre-launched negotiations pose a risk to the economy. Although lawmakers have made lots of optimistic statements about the talks, there has been no result yet. Speaker Kevin McCarthy told reporters, "We do not have a deal," adding that they have been going back and forth with the White House and it's not easy. It takes a while to make it happen and we are working hard to make it happen, he noted. A potential deal is 70% ready, and the parties are trying to reach an agreement on raising the debt ceiling and setting a 2-year budget for the federal government. Besides, the ex-date is June 1st. However, analysts see a few more days of wiggle room. If the US Treasury still has money after the deadline, talks may continue. Nevertheless, market participants believe that it's just a political game in which each party is trying to take the upper hand. So, investors are confident that lawmakers will not allow the government to default on the debt. Therefore, investors pay more attention to other factors, economic reports and monetary policy prospects. The US dollar has plenty of bullish factors now. It's likely to extend its third-week winning streak. In the morning, it rose to a 2-month high above 104 points, and the US currency has been growing for the whole week, as well as the government bond yields amid strong US GDP data and less dovish than expected Fed's meeting minutes. While the US economy remains resilient despite high key rates, the central bank will hardly shift to monetary easing this year. Nevertheless, recent economic data and the agreement on the debt ceiling could affect the bullish sentiment on the greenback. Ahead of a long weekend, sellers have decided to look in profits. Therefore, a correction may take place. At the end of the Asian session, the US dollar slid into the range of 104.00 and 104.30 for the first time this week. Its trajectory was very volatile. The next target levels are located at 102.85, its support level, and 104.31, resistance level from May 25. Due to possible correction of the US dollar index, the dollar-yen pair fell below the psychologically important level of 140. In addition, the Japanese currency climbed slightly amid domestic economic reports and the Bank of Japan governor's comments. Kazuo Ueda said on Thursday that changing the central bank's policy target to the 5-year bond yield from the current 10-year zone would be among the options of economic conditions change. They were really changing for the better. The core inflation in Japan decreased to 3.2% compared to the previous reading of 3.5%. The COINCIDENT index, which covers a range of data such as factory output, employment and retail sales, came in at 98.8 in March 2023. And the latest results were the highest in 3 months, reflecting a steady recovery of the Japanese economy in early 2023. Given such positive macro stats, a small correction occurred and the pair fell to 139.70. The trajectory of the Japanese currency largely depends on the risk sentiment in the stock markets. A steady rise in the Treasury yields after Kazuo Ueda's hawkish comments somewhat eased the pressure on the yen today, and the dollar-yen pair was moving in the price corridor of 139.50 and 140.10. Now the resistance levels are seen at 140.20 and 140.50. The support level after the breakout of 139.70 shifted to 139.40. Commodity currencies incurred big losses because of a steady increase in the US dollar this week. However, they managed to recover early Friday after falling to the lows of November last year. The Aussie resumed growth in the Asian session. Following a rollback of the greenback, the Aussie rebounded to 0.6525 from its 6 months low. The pair's rise was also driven by China's currency intervention and the improved sentiment in the Asia-Pacific region. The AUD-USD was fluctuating in the range of 0.6490 and 0.6529. Moreover, the Aussie grew even despite predictions of a policy reversal by the Reserve Bank of Australia. However, further upward movement still looks fragile. The Australian dollar needs to break through its March low of 0.6565. If so, this level will turn into support. As a risk aversion prevails in the stock markets, this scenario looks unlikely. The New Zealand dollar also bounced off from its multi-month lows at the end of the week. It took advantage of the correction of the US dollar and entered the upward range of 0.6048 and 0.6084. On the daily time frame, the Kiwi advanced to 0.6070. Recently, it has been trading with a bearish bias, declining by more than 3% in a week, and the Kiwi lost ground after the Reserve Bank of New Zealand hinted at the end of the tightening cycle. Therefore, the overall outlook remains bearish. And today, market sentiment will mainly depend on the incoming data and news on the talks over the debt ceiling. And this is why one should be ready for sharp price changes. That's all for now. Hit the subscribe button and keep close tabs on the market developments with us. See you soon.